If you're watching this, you probably remember that time of the year in India. June or July. The rainy season starts, and suddenly, everyone in the office is chasing HR for one specific document, the Holy Grail of tax filing, Form 16. It was simple, right? You get the form, you upload it, you file, and you forget about it. But now, you're in Dubai, London, Singapore, or the Bay Area. You've built a life there. You've built wealth there. But you still have roots and assets in India. And here is the problem I see every single day at EPK Capital. I meet young professionals and seasoned investors who are managing portfolios worth millions of dollars. Yet when it comes to their Indian taxes, they are either panicked because they don't have a Form 16 or worse, they're ignoring it completely because they think they don't need to file. Today, we are decoding the Indian tax season specifically for you, the global Indian. I'm going to show you why looking for Form 16 is the wrong move, the 3 expensive mistakes you are likely making right now, and how to fix them before the tax department sends you a notice. I'm Kunal from EPK Capital, where we build wealth for generations. Let's dive in. As a bonus, I have created an in-depth guide to the 7 costly tax traps for high net worth NRIs, a strategic report on avoidance and compliance. You can download it simply by clicking on the link in the description. First, let's clear the air. Do you need a Form 16 as an NRI? The short answer is probably not. Form 16 is a salary certificate. Unless you are still on a payroll in India, maybe you're a seafarer or on a specific deputation, you won't get one. And that's where the confusion starts. I have clients calling me asking, Kunal, my bank deducted tax. Where's my Form 16? Here is the shift you need to make. Stop looking for Form 16. Start looking for Form 16A and something called the AIS. If you have NRO deposits, if you have tenants paying you rent in India, or if you sold a property, you get Form 16 and not 16. That's your proof of tax deducted. But the real game changer? It's the AIS, the Annual Information Statement. Think of the AIS as the government's report card on you. It knows everything. It knows about that dividend from Reliance you forgot about. It knows about the high-value mutual fund transaction you did last March. It even knows about foreign currency remittances if you sent money out of India. Before you even talk to your CA, log into the portal and download your AIS. If the data there doesn't match what you filed, you will get a notice. It's automated. There is no human checking it anymore. It's an algorithm. So, rule number 1. The AIS is your new Form 16. Now, let's talk about wealth. At EPK Capital, we advise clients with over $1 million in liquid cash. At that level, a small tax mistake isn't just a fine, it's a wealth leak. Here are the 3 biggest traps. Mistake number 1. The I don't live there fallacy. You assume because you live in London, you are a non-resident. But are you? Did you visit India this year? If you visited for more than 120 days and your income in India is over 15 lakhs, you might be treated as a resident for that year. Why does this matter? Because if you are a resident, your global income, your salary in London, your stocks in the US could theoretically be taxed in India. We see this happen with young professionals who come back to India to work remotely for a few months. Be very, very careful with your day count. Mistake number 2. Mixing NRE and NRO. We all know NRE interest is tax-free, but NRO interest is not. Many investors get lazy. They leave dividends or rental income in a savings account that isn't designated correctly. If you don't file your return to claim the excess TDS refund on your NRO account, you are literally donating money to the government. For a portfolio of $1 million, that small leakage can compound to thousands of dollars over a decade. Mistake number 3. Botching the capital gains. If you sell a property in India as an NRI, the buyer cuts TDS at a whopping 20% to 23% on the entire sale value, not just the profit. Let that sink in. You sell a flat for 5 crores. 1 crore is locked away in taxes immediately. Most people just accept this. The smart investors, they file for a lower deduction certificate before the sale, or they file their ITR very carefully to claim that refund back. If you don't file, that money is gone. I want to speak to the young professionals for a moment. Maybe you're in tech, finance, or medicine abroad. You're earning well and you want to invest back in India because you know the growth story is here. The biggest friction point I see for you is repatriation. You bring money in, you make a profit, but can you take it out? Your ITR is the key to unlocking that door. When you want to move your funds back to the US or Europe, the bank will ask for Form 15CA and CB. A chartered accountant will only sign those if your tax filings are spotless. Think of your ITR not as a tax obligation, but as your repatriation ticket. A clean history of filing ITRs, even when you have zero tax to pay, is the best documentation you can build for your future wealth. So, let's simplify this. Here is your cheat sheet for this year. Forget Form 16, unless you had an Indian salary this financial year. Download your AIS. Check it against your bank statements. Check your days. Did you stay in India more than 120 days? If yes, talk to a pro. File ITR 2 or ITR 3. Most NRIs cannot use the simple ITR 1. If you have capital gains or foreign assets, ITR 2 is your minimum. Harvest your losses. Did you make a loss in the stock market? File your return to carry it forward. You can set it off against future profits up to 8 years later. Filing taxes in India when you live abroad isn't about paying more money. It's about compliance that allows you to move your capital freely. It's about ensuring that the wealth you are building for generations isn't stuck due to a paperwork error. Navigating cross-border investments and taxation is complex. It's not just about filling a form, it's about strategy. Whether you have questions about your residential status or you're looking to deploy capital into the Indian markets efficiently, you need a partner who understands both sides of the ocean. At EPK Capital, we don't just look at your investments, we look at your entire financial ecosystem. If you have a portfolio of over $1 million and you want to ensure your wealth is structured for growth and seamless repatriation, let's have a conversation. I've left a link in the description below. Click it, book a discovery call with my team, and let's ensure your wealth is working as hard as you are. I'm Kunal. Thank you for watching, and here's to building your legacy.